Everybody, all my friends are here. Dan, Rob, Don, Kate and Serge, Donald, Will, Craig, Mark, Mad, Kevin, Mary, Cliff, Sledge, my man, Terry, Ed. And then we've got channel subscribers like Mrs. Cheryl. Good to see you. Don't recognize your name, but welcome to the stream. Got Melissa, Francois, and Bradman. Welcome. Robert, Larry. Welcome, welcome, welcome. Make sure you click the button. Thanks for being a subscriber. Make sure you turn on notifications for every time I go live. And happy FOMC day, everybody. This is the moment we've all been waiting for. It's finally here. The Fed is meeting. They've been meeting since yesterday. Will they cut rates? Will they won't cut rates? Maybe, maybe not. The jobs report, apparently disastrous on fake news. That was the big headline yesterday. All the, supposedly the big loss the BLS reported was all on fake jobless claims from Texas. I don't know. Maybe the labor market's not weak, This is kind of the gripping, edge of your seat drama that makes us stock traders wonder why they don't sell tickets to the show. But, there's a little secret for you. My fellow savvy investors, the real action here isn't about this rate cut. It's just the potential start of the show. The real story, the one that might make us some money, is hidden in plain sight. This is the thing they publish after, the announcement, but the thing they publish is called the dot plot. Now, maybe you've looked at it, maybe you haven't, maybe you have no idea what dot plot means. Sounds about as exciting as watching paint dry, and really, you're not wrong there. It's literally a chart, if you print it out, piece of paper with a bunch of little dots on it. And the story here, though, is that these just aren't any dots. These are the secret anonymous predictions from the FOMC, the members of the Federal Open Market Committee. Now, this lets us try to predict how Fed members are going to see interest rates unfolding in the future. This is where we get, we expect one rate cut, two rate cuts, how many this year, how many next year, how many looking forward. Now, think of the Fed, the FOMC committee, as a cast of characters in a high-stakes game. And you've got your hawks, the ones that want to keep inflation under control. You got to keep rates high, keep that inflation under control. And you've got your doves. When they talk about hawkish, want to keep rates high. When they talk about dovish, you want to lower rates, boost the economy. And then you've got some wild card players. First up, our leading man, Jerome Powell, Fed chair. He's the one everybody talks about. Everybody acts like he's the one that drives the train. He kind of does, being the chairman. He's trying to keep everybody happy, but not bend the knee and kiss the ring. I mean, it's kind of like herding cats in a hurricane with extreme weather. And you're pretty much guaranteed to vote for a basis point cut. I mean, he's pretty much said he's going to vote for a 25 basis point cut. I mean, that's kind of what we expect, right? Then we have more colorful characters in the cast. On one side, you've got the hawks, like Beth Hammock, a former Goldman Sachs partner. The kind of person who probably thinks inflation is a personal failing. On the other side, you have Mary Daly, who practically begging for rate cuts. And this is where it gets interesting. We have a new player in the game, Stephen Moran, who was just confirmed. He's Trump's guy. And he's expected to be a super dove. And then there's Lisa Cook, a Biden appointee who Trump literally tried to fire. The court said no, so she's still in the committee. And nobody's quite sure what she's going to do. It's kind of like a reality TV show, but with the global economy potentially at stake. So, what does all this drama mean for us, the savvy paying attention? Well, quarter point cut, 25 basis points. The market pretty much already has that baked in the cake. We've already priced it in. It's all but a foregone conclusion. It's like 96% likely on poly market, Kalshi, and the Fed futures market for rate cuts. Now, the market kind of expects it, but the dot plots, this treasure map, well, it's going to tell us what to expect for the rest of 2025 and into 2026. And that's where the potential opportunities might be. If the dot plot shows the Fed is planning more rate cuts this year, maybe even elevating the rate cuts into next year, maybe 0.75% cut next year instead of the 50 that we've been, the half a point cut we've been expecting, that might be a green light for a few key sectors. Dividend stocks, as rates go down, the yield on these stocks become a lot more attractive, and the Fed basically forcing people to buy your stocks, in essence, a beautiful thing. Second, you got small cap stocks. These are little guys, the ones who are very sensitive to interest rates. They got to borrow money to expand business. When rates go down, cheaper to borrow money, cheaper to grow. And this is where you can find some explosive growth if you get in the right stuff. But how do you pick the right ones? That's the biggest question. And finally, you got real estate. Lower rates typically bring down mortgages, but that's not what we've been seeing globally. If you got more people buying houses, well, it's not rocket science. That's kind of the driver of a lot of the economy. Now, there's a chance that the Fed will do something completely crazy. The article that I've been reading even mentioned the possibility of a historic four-way split in the vote. Can you imagine the Fed, the institution that's supposed to be the adult in the room, having a complete meltdown with a four-way tie? I mean, it would be chaos, potentially. And chaos, my friends, is another word for opportunity. So here's your potential homework between now and the end of the day. Watch out for this dot plot that comes out. See where these little dots land, and maybe I'll break it down for you tomorrow or someday soon, if you want to. I mean, let me know in the chat if that's something you're interested in. And because everybody else is distracted by the political theater going on, we can quietly make some money if we're in the right stuff. So I'll see you again on the monologue tomorrow. But remember, for my channel members, I'll be live at probably 1:50, right before the big show at 2 o'clock Eastern time. We'll kick this off. We'll see. We'll see what happens. Remember, all trading involves a substantial risk of loss. And past performance, well, it's not really indicative of future results. Just because something happened in the past doesn't mean it'll happen in the future. Now, December 2024, just an example, December 2024, it was a foregone conclusion. We were going to cut rates a quarter point. I mean, the market was convinced. The betting markets, convinced. The Fed futures rate, convinced. Everybody was convinced. We're going to cut rates. What did they do? No rate cut. December 2024. What happened? Down 3% that day. 3% pullback in the S&P. Past performance not necessarily indicative of future results, but be prepared. This presentation here intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos. Don't trade them. You might lose money. If you desire personal financial advice, go hire somebody that has a fiduciary duty to give you advice based on your financial situation, which is not what I do. I don't even pretend to do that right here. I have no special deals, no offers to trade for you. Here's the big show today. Coming up, we've got the Fed funds rate, FOMC statement, those dot plots, and then Jerome Powell can't help himself, but he's got to go speak at 2:30. Got to get out there in the public. All the Fed members before him weren't as I don't know. I don't even know what you call it. It's almost like a megalomania thing where you have to get out and talk in front of the people every time. So be careful out there. Be careful out there. It's gonna be create chaos. Set alarm. If you got anything that needs to be closed today, maybe you should close it before 2 o'clock. Right there. Might be a wise thing. I'm going to be on Market Masters today at 11:30. It's prosperitypub.com/marketmasters. Let me see if I have a link for that. I can throw in the chat. I made a document last week. There it is. Found it. Oh, I don't even have. I don't have the actual link. Let's see. There it is. There it is. That should be it. If you want to register for like a SMS reminder, if you want to, we're looking at rolling this out starting next week every single day at 11:30. It'll be on Zoom. It won't be on YouTube, but there you go. There you go. That's Jack Carter and I. Jack decided that he kind of likes working with me, and he'd like to roll this out every day of the week, help more people, talk about more trades. So there you go. More shows. That's what y'all love, right? And those shows have a, just so you know, those shows have a little bit of sales component to it. So big winner lately for me. I've got thousands of shares of this, and I would love to see it head on up here in the 50s. Tesla's charts, as you can see, performing a lot better than the TSLL charts. This pullback was pretty damaging to TSLL. Pullbacks on those leverage tickers, it's pretty rough, because a 50% pullback in the underlying is a 100% pullback on a 2x leverage. And then it takes, to recover from like a 50%, a 25% pullback here is a 50% there, but a 50% pullback on TSLL means you need 100% upside. So if you just pull back 25% and go up 25%, when you leverage that and 2x it, that's a 50% pullback, and then a 50% gain on a 50% pullback. That only gets you 75% back, basically, because you need 100% to fully recover. So that's the risk on the leveraged tickers like TSLL. Mora potentially get some breakout boom action here. If we can get some continuation, that'd be beautiful. Run the high, run the low. Not to the 618 yet. There's the level we gotta get through. That puts us in immediate upside potential right around 22 to 23. And then the bigger picture, longer term correction here. 1, 2, 3, ABC. Potential bigger numbers up here. 38, 44. I definitely would appreciate seeing those kind of numbers. Yesterday, I sold a bunch of 30 strike calls against a lot of my position. I mean, I sold, I'm going to say nearly, I got close to 100 contracts I sold up here. October 3, 30 strike. They were going for about 6 cents, 0.6, about 6 cents a piece. You think 100 contracts? That's a lot. That's representing 10,000 shares, basically. So 6 cents. Move the decimal 1, 2, 3, 4. 1, 2, 3, 4. That's about $600 in premium. Maybe like, well, that's not worth the risk reward, but I don't really expect it to break out through 30 before October 3. Even if it does, that's a lot of thousands of dollars. 10,000 shares, 17. You do the math, 30 minus 17. It's a $13 move. It's $130,000. Be a nice chunk right there. So, anyway, got skin in the game? Yeah, I got skin in the game. Looking for this baby to pop Peruski. I'd love to see it. I'm gonna be disappointed if we don't. Put it that way. Put it that way. ES overnight, pretty dead. Like the action just got the contract rollover going here. But we just look at this price action here. This gap is going to be filled at some point. Might even dip down and fill it today on the FOMC meeting. That gap will be filled, but market closed yesterday. And like right in here, nothing. Just a big fat nothing. Why do I look at the futures? Because, well, there's not much here. And this is a big fat nothing too. And we don't get any overnight action. Market just open, but open flat. Ooh, come on, baby. I have a couple credit spreads on SPY I'd like to see close out. In Q, same boring price action. We're probably just going to, highly likely, we just kind of sit. We've kind of defined the range. We're probably just going to sit here through the FOMC. Low probability we do anything else. And then we'll see what happens. We've got the high, we've got the low. We break, if we were to push up through this level up here, we could see some upside boom action. But I'm not holding my breath. And in Q, oops, 25. NQU 2025. There we go. September contract did come up and scraped my target. I was warning that if we hit that upside target, coming into FOMC, we might expect a pullback. This takes out the gap from the contract rollover. So go back and look at the bigger picture. Pullback here. That high, this low. This won't be exact because there's other contract rollovers that happened in here. Yeah, came up shy of that 24. See on the constant contract, the level 24.4. And with the contract rollover, we tag that right here. But even not getting the contract rollover this week, the September contract did tag that level right there. That kind of completes it. Completes the pattern. Even the cash index up there. Now, next upside, that's what everybody wants to know. Like, what might happen on the upside? Be careful. This is a long way up. And we went kind of exponential here in the last few days. Next level up, though, 71.30. There's some intermediate stuff in between here. There's some levels at, well, we're at 66. So there's some levels at 66, 66.50 on the smaller time frame stuff. But odds of a bigger pullback, 2-3% elevated right now. It's relatively rare that we go on one big rip and never pull back at all. The longer we go, the bigger the pullback's going to be. That's the lesson here. Russell, this one could stand, this might pop. If we get the rate cut things and everything goes well, we could see this up to 2,600. It's set up the price pattern from this high down to the low we made in April. This one's been lagging way behind, has not made new all-time highs. Pop up here. Might be what we get. That'd be interesting. Now, as long as we're below this high, though, we have a vicious 1, 2, and that 3 could be very vicious. So as long as we don't actually make a new high, there's a downside setup for a rapid crash type flush out. And the target for that would be down here, like 1,300. Is that like 1,000 points off of Russell? That's the danger. Oil still making lower highs. That could flush down. Gold. So we might go again on gold. I don't know. We'll see. Gold rush trade comes out this afternoon after the FOMC. Yeah, we'll see what happens. I have no preconceived notion what this is going to do. We did tag that upside target that I talked about. I feel strongly about seeing a correction in the coming days, but that doesn't mean it'll happen. We could just rip on higher. 3,800 next, 3,880 basically next upside resistance. Bitcoin. Hey, Kimberly's here. Yeah, the market likes to hold its breath on FOMC days, and this muted play today, yesterday and today, that's more like what I would expect on a FOMC day. Now, really want to see this tag 18 right here. And it's potentially got a 1, 2, 3, 4, and we're hunting for the 5. Ideally, it'll hit this 18.2, and then we may do a 4 back down here, and then do a 5 up here to around 122, and then we may do another faster correction back down in the same 115 vicinity one more time. 114, 116, and then actually set up the big finality move. It's kind of what I'm keeping my eye on here. If, like, here's the big if we break down below this high right there, this high right here, that's the danger zone right there. If we break down below that, not good. Wrecks the upside potential pattern. So that's an important level right there. If we get below that right now, without, gosh, we can't. I don't really want to see it below that before we tag 122. So if we go below this, before we tag this up here, 120, 122, we're in trouble. It's the first indication that crypto winter is starting. If we break through that, so that'll be a bummer because that means nothing's gonna go on and hit the targets probably. Not liking that potential right now. Ethereum Still holding the top of the box. We shoot up there, that'd be great. If we break down below this box, well, probably going back down into the roadmap line would be what I expect. That'll be a push, maybe find support here at 4,000 area, but more likely we get extension down here around 34 to 3,600 on Ethereum. NKD, the world literally holding its breath, waiting for this FOMC rate change announcement. I mean, the world thinks, oh, this has dropped off. This dropped off since yesterday. This was 96, 97% yesterday. This is ramping up. But this is still, look at it. Look at the payout here. This yesterday was 55,000. It's dropped down to 43,000 now. The odds of no rate change ramping up a little bit. The odds of a bigger rate change ramping up a little bit. Interesting. Interesting. Dollar, look at that. Boom goes the dynamite right in the target. So, things to watch for the dollar. It's that level right there. If we start breaching it, probably coming on down, hunting for a target down around here for support. Lower low than that low right over there. If we bounce here, things get spicy today. This will be the level up here around 98.5. If we pop above that, odds are we're going to come into the daily roadmap line, which is way the heck up here at 100. Go shooting back up there. We are quite stretched away from that right now. Cool. Don't have my new indicator on here. Let's see. Turn this on. And we're just one standard deviation away from the roadmap line right now. One standard deviation. Extreme moves get out to 3. So we're just 1. So this definitely has room to drop on down. Has the ability in the room. Apple. If you want that 3 standard deviation thing, join Termite Trading Lab. Links in the description. I gave out the code for that this week. Apple, despite potential strong momentum with iPhones, those 17s, Goldman Sachs saying that there's actually supply chain shortages and backlog to build more phones, and it's growing by the week or by the day. So there's actually stronger demand potentially for the 17s than Apple predicted. That could be good for next earnings, could be good for first quarter earnings. So potential to break this thing on out. If that holds true, that doesn't mean we won't get a pullback and chaos in between. Amazon still not able to get through this gap down. Still chugging on here. Support down here at the roadmap line. We break down below that, further down, back to the lows. Google still looks good for that pop to 263. Meta, that's probably going up to 840, excuse me. And Microsoft, resistance right here, 530. And a potential to pull back bigger. We did this bigger pullback before. 1, 2, 3. Big rip. No pullbacks whatsoever in here. Just big rip off the lows. Consolidation back to the roadmap line. This could take a few months too. Like this could be, this one took almost a year. This one could definitely take a couple months longer, maybe push it into Christmas season before we see this pop again. NVIDIA, big news on NVIDIA today that AliExpress was banned from buying their chips. China, Beijing, banning big tech companies like Baidu, PDD, AliExpress from buying NVIDIA chips. No matter the chip, buy from our local supplier. Probably coming back down. Can the market go higher if the two big dogs are expected to correct? The two biggest companies in the land. You're like, what are you talking about? Two biggest companies in the land. By market cap, NVIDIA and Microsoft up here at the top. NVIDIA at 4 trillion. Microsoft at 3 trillion. Google just joined the $3 trillion club this week. So without the two big dogs and Apple down here, not looking strong either, can the market go higher without the biggest stuff? 11 companies, just 11 U.S. companies, 11 have been responsible for 59% of the market cap gains since 2019. Think about that. Like, that's 11 companies. That's concentration. When we look at how many companies are on this list, 18,000 assets. 11 responsible for 59% of the gain. That's pretty elite right there. Can the market drive higher without those? Big question. Tesla, probably going to grind here a little bit. I see a major resistance up here around 450 to 460. If we get through that zone, we're going to 500. More than likely. And Elon basically declaring war on shorts by buying $2 billion worth of shares. So watch out. He's going to pull all the strings he can. Netflix, first move down, retrace. Probably going to get this 4 or 5 down into this zone. That could last on into the fall, but usually the C waves are a little more violent than the A waves, typically. So I go pull all the gainers, everything moving $2 or more up in the pre-market, put it on the gainers list, and I grab everything declining $2 or more, put it on that decliners list. Those are in the pre-market, so as the market opens, things change. And we hunt for some opportunities. And I brought 5 setups today. So we'll take a look at those if you hang out for a few minutes. Come back to them. And that's a CEO protecting his price. That's right. You know, something my man Jack Carter points out. AVGO, this CEO right here, this guy said that he agreed that his compensation will be based on the money they make from AI. He's so confident in AI, he's going to base the money they make from AI on his compensation. It's probably coming back here, but it's kind of interesting. So Jack really likes that CEO too, for that reason. Workday, up to the roadmap line. Bigger picture, probably still in a correction. First move down, choppy 3-wave retrace. Got up to the gap, couldn't fill it. Probably needs a dip down, lower low than that to finish this baby up. Somewhere in this zone. So watch out for resistance here. This may be a catalyst. That's kind of a 3-wave up into that. Maybe a catalyst for going down lower again. Time frame, I don't know. This can take a while to finish out here. Draw this thing out. C waves typically fast, but you can see it started out fast, but then now we're drawing this thing out. Baidu continues to rip. Okay, let's check on KWeb. Go, baby, go. if you want China internet big tech company exposure without trying to concentrate, this is a way to play. I am in a trade on this. You see Tencent, Alibaba, PDD, JD Health. I don't even know how to say that one. Another Tencent Music. Not Kanzu. Another Baidu. Yeah. It's funny, Trip.com in here. NetEase. Billy. So here's your China exposure here. If you want some internet exposure to China, there you go. K-Web, I'm looking for a pop on higher here. Looking for these levels, 44, 48. I bought a call spread here. I think it was a 41, 47, something like that. Had like a $6 potential upside. Baba ripping 2, getting up near the target. Could see this on up to 190. JD hadn't really got going yet. And PDD, which is Timu, hadn't really got going yet. So for a while, I've been talking about this 180 target up here. So could have a nice upside there on PDD. A-Lab. Next upside target, 294. ETU. Probably going to pull back. Carvana. First move down, retrace. Wouldn't surprise me to pull back again. Baba, we already looked at. HIND. Nothing there. For me, PDD reconfirming the 180 targets. This is a weekly chart bounce, so this could take a while to play out. See, this is a weekly chart bounce. Kicked off the entry back here, all the way back here last summer. Just been waiting. So 45 candles on average is how long this takes. These are weekly candles, so that's 45 weeks on average. Standard deviation on this is 35. 3 standard deviations gets you the 99%. That pushes it out to 150 candles. So this could take 3 years to play out. Be careful. This thing could chop in here, but you know, internet in China gets spicy. This will probably hit faster than that's 99. That's to cover 99% of all cases. Remember the average though, 45. So CWD. I wouldn't touch it. Look at all those red candles. Even on that pop, red candles. It's like that whole pop is the wrong color candles. Every pop met with selling. C-Web, here's another. This is 2x bull on China. If you don't like K-Web and you want more leverage, buy shares here. Potential. Orca. Yikes. Reverse split. Not bullish. I wouldn't touch that. Baba X, if you want some exposure with leverage on Baba without buying options, there you go. Yen, the yin and the yang. China 3X leverage, potential to pop. Square feet, Presido property, trust. I wouldn't touch that. Reverse split hanging out in here. Danger. These, when the big number's on the bottom, big number second, that's danger. It's danger, danger. Another one. Danger. CG. Zilla Group. 91, possibly 96. That was a nice. I made my money back here on the early part. Not playing the final part. This is likely coming into the end, the finality move here. Potential to get a bigger pullback somewhere back in the 50s and then a bigger move up. Wouldn't touch that. Another reverse split. Spot those like a... How do you know the reverse splits? When the chart is under the roadmap line and doing this, a company doesn't do a regular split when their stock price is doing that. All right. Now, if their stock price is doing this and you get one of those splits, usually it's a good one. But this one right here, danger. This one right here, danger. Danger, danger, danger. They can go out of business. IONQ. Well, that's ripping right up to the target, 62.72. That's the next upside targets there. And Zillow Group, again, other class shares. There's the target, 92.95. And we're scraping the 92 already, so we may see a pink, may see this chop in here. It's having to grind that out. So we may see it pull back before we can grind it on up and pull back, possible to grind it on up to 104 in BIS. There you go, 103. Decliners. Man, watch for that to drop back to the roadmap line. Duolingo. Look at that. Perfect. Look for this to hold a bottom, hold a higher low, break through the roadmap line, and then set up the bigger run. Lily. Coming up to the roadmap line. If we can get through and then break above the downtrend of highs, then we set the next upside move up. Race chopping in here. Got to fill the gap before we can pop to 529. If we break back down here, next support at this prior low. And if we get below that, might embark on a bigger correction for Ferrari. Progressive, grinding at the low here. I'd love to see this pop finally. Resistance at the roadmap line, support down here. And we're just sitting in that ABC correction zone. Upside potential right up here, 300. GXU, leverage gold, JNUG, leverage gold miners, juniors, Forward Industries. That's probably going to correct back down. Has a reverse split. Danger. Danger, danger, danger. Hanging out. 3X on Korea, potentially breaking out. We could see some more upside continuation, but we're into these. We're into this next level of, the extreme level highs that we'll have to break through to get any of that continuation. LEU, first move down, retrace. Watch for that move. Although I do have a bigger upside target up here for LEU. AVAV, was that close enough? Like that could be a three-wave complete. If we can break through that prior consolidation right there, 306, 317, possibly 350 on the upside for AVAV. PPLT, physical platinum. This may pull back, but the target is up here around 160. Palladium, also target up here around 123. Turb, and nope, not touching that. Solana. This Solana has a nice upside potential. Let's see, crypto. We could extend this on out to 344, possibly 400. There's your targets on Solana. So looking at this one, don't have enough to do much. You kind of have to take the upside on this chart. It's almost a double. So this one could probably almost double. So you could be looking at 140 maybe. AMD needs to pull back further. AGQ. Ultra Silver. Well, look at that. We basically tagged the target, so won't surprise me to pull back. AEM. Won't surprise me to pull back there either. So setups for today. Berg. Turn on the statistics. Pull that down. And we don't have any meaningful statistics here, but there's the high, there's the low. Kick it off, 249 target, P core. That one worked out last time. Here's the high, here's the low. Down a little bit. And target 81, pulse. Here's the high. Tool, work. The high, here's the low, kicking it off, 1850 target. Turnmeyer, or Turkey, Turnmeyer. There's the high. Keep missing the, keep not clicking the target, not clicking the tool. 3691 target and text. Here's the high, here's the low, kicking it off, 86 on the target. There you go. There's bias for the day. Caution, probably just kind of sit and wait until FOMC, and we'll see what happens. I'll be live for channel members at 1:50. Come hang out. Till then, be careful, everybody.